Ayo, what is up? My name is Ishan. You're probably busy, which is perfect because on this channel, we like to keep things short and sweet. No fluff, just quick and to the point. So in the next few minutes, we're going to be going over what's been going on with gold, what you should do, and a quick technical analysis at the end because gold could be setting up for a massive move. So make sure you've subscribed because unlike other YouTubers who are always trying to hit that 10-minute mark with a bunch of fluff for the YouTube algorithm, we on the other hand on this channel like to keep things short and value packed so you don't waste that 10 to 20 minutes of your time. So come on, subscribe and let's clock in. So we actually made a video calling out gold's potential to go higher, and that GLD, which is an ETF that tracks gold's price and is backed by physical gold, would also head higher as well. We called it when it was at 178 and it actually ended up running all the way to a high of 194 before pulling back to 180 now. I also showed you guys my personal position in GLD, which was about 60 shares or $10,000, which I bought in at $163. I actually sold a bunch of my shares at above 190 and I'm currently holding only about 15 shares as you can see here. So why has gold been falling? In fact, we saw the biggest drop in gold since 2013 a couple weeks ago. And this is because of two reasons. The first being the recovery of the economy. As we've seen, jobless claims fell from 6.86 million in May to below 1 million early this month for the first time since the pandemic started. US retail sales have bounced back up to pre-pandemic highs, and a couple weeks ago, people passing through TSA checkpoints at US airports rose for a second consecutive week with over 830,000 people on Sunday. So just the bounce back in the hardest hit sectors, which is pretty much bound to happen anyways, that rebound has caused gold to pull back. The second being no stimulus and a decrease in global tensions. Fiat money, which is just like your regular currencies, can be printed and used in unlimited quantities, but gold on the other hand, there's only a very limited supply. This, as a result, has historically preserved the value of gold. And just looking at this chart, we can see that gold has outperformed all these currencies over time as their value has just continued to degrade compared to gold. What stimulus does is that it adds cash into the economy and as a result ends up degrading the value of the dollar. Stimulus shows that first, the economy is not doing well, and second, it prints more money. As for global tensions, well, gold is seen as a safe bet for anything related to that, but we've seen US-China tensions somewhat cool off, and that as a result has caused a retreat in gold prices. So now where are we going from here? What's next apart from you subscribing? Well, today we got news from Jay Powell and the Fed that they would be aiming to achieve inflation averaging 2% over time compared to keeping it under 2% in previous periods. What this means is that they will continue to keep interest rates low and let the economy inflate itself without much interference. Now, this is supposed to be a good thing for gold because as we can see here, gold tends to perform better in periods of higher inflation as the value of money decreases. And this is definitely awesome news for gold long term. But in this case, Powell also stated that now the Fed is going to be focused on building job growth, which means that they won't be printing money and crazy stimulus. In a way, he seemed like the whole pandemic situation is behind them and now it's time to look forward. And so this underplaying of that there's no further threat to the economy and now it's time to focus on jobs, that led gold prices to fall on that news. So here's what I believe is going to happen. Based on everything combined and everything we've heard from the Fed as well, I believe that gold prices are heading lower short term, but in the next few months, I believe it will recover and head back up. Here's why. Firstly, we have an election coming up. Depending on the outcome, like an example of Trump winning, we can expect more tensions with other countries and this would be a plus to gold. Secondly, even though now the Fed's main goal is to get the jobs market better, companies are still struggling. US bankruptcies, according to market intelligence company S&P Global, are set to hit a 10-year high, and so it would not be a surprise if the government had a new stimulus package. And you still have to remember that the Fed is still running its lending programs, which are causing more and more money to enter the economy. So with all of this combined with the Fed letting inflation run loose and keeping low interest rates, I believe this is going to cause gold prices to continue to head higher. Taking a look at the technicals, as we can see, both gold and GLD are forming a triangle which signals either a big move up or down. I would recommend waiting for the breakout before buying because you don't want to buy before and have it squeeze lower on you. So wait for the breakout if you plan to buy. So let me know down below what you guys think, where you guys think gold is heading. Personally, I believe we're heading higher for the next few months. The Fed has just printed so much money and it's bound to catch up with them, especially now that they're letting the interest rates just go loose. So let me know all of that down below and make sure you subscribe. This was super value packed and short, so you didn't have to waste your time. So make sure you subscribe, like, and I'll see you guys next time. Clocking out for now. Take it easy. Peace.